Hello, my name is Steve Bigelow with the Candlestick Forum. Markets are doing very well, and we've got very good, easy trend analysis assumptions based upon candlestick confirmation. For example, today the Dow traded off lower first thing, but notice where it's supported, right smack dab on the T-line, making this uptrend still in progress. At the same time, the NASDAQ opened at the T-line and immediately started trading higher. Very simple analysis. If one index is trading lower and the other index is trading positive, tells you there's really no major change of investor sentiment, just different sectors working well. So this is where utilizing your candlestick analysis for the patterns, such as the slow curve, produces very strong price moves. Now, what do you do with it after that? Well, we can see that now ALT, we're continuing to hold because of two factors. One, they've never been able to close it back below the T-line. And two, now we're in a J-hook pattern, which the assumption is, if this is wave one, wave three will be the same magnitude. This is not rocket science. This is merely taking the information that the Japanese rice traders have provided for us, telling us what human nature does time after time, and just applying it to our trading. We know the uptrend is still in progress because look at Amazon, up over 230 points today, doing a J-hook pattern. And the fact that it's above the T-line pretty much tells us it's still in an uptrend. And if Amazon's in an uptrend, Apple's still in an uptrend, NVIDIA, Tesla, all the big names are still trading up. That pretty much guarantees, we shouldn't use that word, pretty much assumes that investor sentiment is still very positive. We also have the capability of identifying what the strongest price moves are going to be during an uptrend. Our recommendation on IMMD was based upon this hammer gap up. Most investment advisors say stay away from the gaps. You don't know what's going on when they're gapping the price around. Using candlestick signals in conjunction with gaps puts you in very strong positions. We know what the signals are telling us. There's a change of investor sentiment. We know what a gap up represents. A very strong desire to get back into that position, which is exactly where, as an investor, we want to be. After a reversal signal in the oversold area gapping up, we want to be buying immediately. That same scenario, this is what we're going to be concentrating on this coming weekend, July 25th. We are going to be doing a full day training on how to identify the strongest signals and patterns and what the results are. As we can see in our GFI recommendation, because gold stocks were working, look where you had kind of a little gap up from a doji off the 50 and the T-line through the resistance level, making this hold very simple. We stay long until we see a sell signal and a close back below the T-line. But that also puts us into our recognition of the fact that the gold sector is still working. So our recommendation today on Harmony Gold was based upon the kicker signal. After a fry pan bottom, strong price move, we can assume this is setting up for a classic pattern, and the J-hook pattern is starting because of a kicker signal. So here's where you put 2 plus 2 together. If you've got a kicker signal, which implies more upside, you've got a fry pan bottom, strong price move, now a J-hook pattern starting, that pretty much adds up to being in the right place at the right time. Same assumption. Wave one and wave three are probably going to be the same magnitude. As long as the NASDAQ continues to trade above the T-line and the Dow is staying above the T-line, the assumption is the bullish sentiment is still in this market. You stay long until you start seeing sell signals, which we haven't seen yet. That'll be it. join us this Saturday. We're going to be doing the top ranked signals and patterns. It's probably going to be about a 6-hour session, and we're going to quantify from the best of approximately 18 power signals and patterns that will put you in situations where the probabilities are much greater. You're going to have good profits as well as high probability profits versus just merely being in an uptrending stock during an uptrending market. That'll be it. We'll see you in the chat rooms.